Good morning and welcome back to this new episode of the weekly analysis. Let's start as usual with a recap of what happened, let's say, last week and over the weekend. Basically, the past week went exactly as we expected, meaning that practically nothing happened and the price just moved sideways as we had anticipated because there were no major macro data releases or any events. In short, no catalyst capable of moving the market even a little. This week should be a bit different because, in short, there are many important and highly anticipated macroeconomic data releases coming out. And above all, over this weekend, there was a further update to the lists with all the tariffs imposed by Trump, with the sending of the latest letters, including to the European Union, to which Trump is applying a 30% tariff. So all these tariffs will definitely have some repercussions to some extent on everyone. Obviously, the impact will be spread among distributors, retailers, and producers. It won't fall entirely on a single group. However, this could certainly trigger inflationary pressures in some areas, while in others it could lead to a contraction in consumption. So we'll see what the consequences of these tariffs might be. The market isn't reacting to these latest tariffs the same way it did to the previous ones. For example, if we look at the charts, the last announcements from Trump, I think, were last month, and the market, for instance, the DAX, lost about 8 to 10%. Even the American markets opened sharply lower quite persistently, only to recover once those tariffs were essentially postponed, and the market quickly bounced back, seizing that opportunity. In this particular case, however, the financial markets have reacted in a much more orderly fashion compared to what happened previously, as I've already mentioned before. There was indeed a downward opening here as well, but essentially nothing particularly dramatic or alarming. And already now during the European morning trading session, the markets are steadily recovering from this initial significant drop and are actively trying to close the substantial gap that was created with Friday's close. So this is the scenario from an operational point of view. Basically, volatility continues to surprisingly decrease, and this is definitely something to take note of and something we absolutely need to respect, because usually these periods of calm tend to end up exploding in one way or another, and the week ahead from a macroeconomic perspective we can assume it could definitely trigger an increase in volatility due to the important data that we'll now look at in more detail. But basically, if this data turns out to be accommodating to the current economic scenario, we could even expect a further decrease in volatility, with markets continuing this steady, slow, but ongoing rise that's been happening for a while now. So we'll see what will actually be the real developments. As we were saying about the macroeconomic data, it all starts tomorrow with the CPI, which is obviously very, very important and highly anticipated, and will reflect a bit, let's say, the first signs regarding this whole tariff situation that has come to light. Then on Wednesday we have producer prices and retail sales. And then on Friday, we have the options expiration, which is also very important because after this significant options expiration, the market will obviously have fewer obstacles and therefore will have definitely more room to move either up or down. Honestly, I can't say which direction, but it will certainly set the stage for the search for a new equilibrium range, which could be either higher or lower. We'll see. In any case, based on the data that will come in this week, and also the earnings, the quarterly reports that start coming in this week, it begins with the financials. I believe the first to report should be JP Morgan, and then gradually all the others will follow. So this will definitely provide a first key to interpreting the earnings season also for the other sectors. So maximum attention this week, precisely because it should be a rather eventful week. Let's obviously look at things from a technical point of view, starting as usual with the Nasdaq. We can see that, well, the market opened lower and basically the price settled on the first support, so on VS0. So it hovered there for a bit. There was an attempt to continue the downward movement, but then it recovered and re-entered the range, the first weekly range, which we know is between VR0 and VS0. So if the price manages to recover the VA area, VHHV, both daily and weekly, we could easily consider this just a temporary blip. We'll see how things develop throughout the day, so let's keep monitoring these levels within the usual weekly opening range, keeping in mind that we've already dipped below and that we have this BC3 level, the BC3 area from the regular trading hour open, which marks the low recorded last night around 22,800. So let's keep this low in mind, because if it's breached, it could obviously lead prices to test a lower weekly level, which would definitely be VS1. On the upside, of course, we are monitoring the VHV, HWHV area, because right now that's the dividing line for any new bullish attempts. You can clearly see how the price action moved sideways throughout the entire trading week. So basically, we can confidently file last week away as a truly sideways week. We'll have to see if this current week offers any significant trading opportunities, depending on, well, precisely what I expect to unfold. Let's obviously move on to E-share. It is. The situation is more or less similar, although here I was working a bit lower. You can see that it broke the high recorded during the regular trading hours, and it's currently hovering around that area. From here we could see a bullish leg start, maybe to test this BC3 level and then further up the 6,300 area, which is an important resistance also in terms of options. It's a round and significant number. On the upside, of course, a break of this area here, 6,330, 6,335 could easily push prices up to the 6,350 area and even beyond, especially if the data turns out to be particularly accommodating. Let's obviously move on to the other American futures as well, starting with the Dow Jones. Here it comes. Here it is. The situation is more or less similar, although here we're still stuck in this regular trading hour range. It's still working within it. So a break of this level, so 44,450, 44,500, could easily lead prices to retest this area of the lows recorded on Friday, which also represents the low of the BC3 area, basically today's SD0 and SD1 levels. So it could definitely encounter some resistance on the way up, but if it manages to break through and recover these two lows, I believe there could be room for a move, maybe even to test WR0 area, or at the very least 44,600 or 44,700, which I think could easily be reached today. Let's move on to the Russell. Here it comes. Well, the Russell has wobbled a bit more. It's a bit more volatile and is obviously affected by, in short, this whole tariff situation, which could obviously lead to a contraction in consumption, even though they could also benefit from it, because certainly, well, increased domestic production would definitely be more beneficial for the companies listed on the Russell. As you can see, it has broken through the BC3 level, and right now it's basically working on retesting it from above. From here, a new bullish leg could start, which could first of all close, let's call it a gap test downward opening, and recover the HV level, and why not even the WR0 level, which represents this area of highs that has acted as strong resistance. 260 is an important resistance that could be the target in the event of a strong rebound for the Russell. Let's now turn our attention to the performance of the DAX, which much like other indices has experienced a notable situation. Year two, the market dynamics were significantly influenced, obviously due to the specific letter that was sent to the underlier. This communication triggered a discernible, albeit relatively contained, drop in the index's value. As I previously mentioned, and it's worth reiterating, the DAX demonstrated remarkable resilience and managed to hold up considerably better when compared to the more pronounced reactions observed previously. particularly in response to the announcement of new tariffs. This resilience indicates a stronger underlying stability, or perhaps a more measured investor response in this instance. The index successfully managed to contain its losses, preventing a more severe downturn. You can clearly observe from the current market movements that it is already beginning a recovery phase, although this rebound is proceeding at a somewhat slower pace than one might ideally hope for. It is crucial to keep in mind that the DAX had recently achieved and recorded all-time highs just last week, reaching unprecedented levels. Given this context of recent peak performance, it is entirely understandable and indeed quite normal to witness some degree of profit-taking by investors. This natural market behavior involves investors cashing in on their gains after such a strong upward trajectory. Looking ahead, we will definitely have to closely monitor and analyze what the forthcoming economic data will reveal. Furthermore, it will be essential to observe how the European economic numbers will ultimately come in, as these figures will provide critical insights. Based on the comprehensive analysis of this incoming data and European economic performance, we will then be in a much better position to make more informed and accurate assumptions regarding the future trajectory and stability of the market. On the downside, of course, we are closely monitoring VHV first, which is a crucial initial level, and then subsequently VS0, which definitively represents the very first significant weekly support level. However, honestly speaking, just trading decisively above these current highs here could already provide a substantial and powerful new bullish push, indicating a strong upward momentum in the market. We still have to look at gold. Here it comes. Basically, it recovered most of its losses. Last week, it went to test the 2,380 area, even dipping slightly below it, but then managed to recover and stage a bullish surge that has now brought prices to the 2,390 area overnight. So basically, we are trading above the daily RD1, which already gives us a clearly bullish tone. It even went beyond VR0, although it then moved back within it. Or in the scenario where we break through the VHV level, we could easily expect a test of this whole area around VS0 and then maybe look for some kind of rebound opportunity. Bitcoin keeps moving, and so do the other cryptocurrencies. Here's Bitcoin. It made some strong moves right from the open, heading towards USDT. It hit 123,150 as the high overnight and is still performing well. You can see there was a big influx of volume here, which essentially set the price at VR1. After a bit of retracement, we've already broken through VR1, basically tested VR2, and we're now trading around the daily highs. From here, we could obviously see another bullish surge that might push prices to test this week's VIX cluster. Perfect. With that, we've reached the end of this weekly analysis. Please be extremely cautious with everything we've discussed, and make sure to note down the release times of all the data I've mentioned. As always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thank you all for your attention.